Let's go to Chris Kotowski, bank analyst at Oppenheimer. Chris, you heard that interview with Mr. Pandit saying that he felt he answered the TARP Commission's questions very well. Would you agree?
Yeah, I thought he did a great job. He represented his company very well.
All right, so what did Pandit, how did he advance his case for Citi in your eyes, if you were so impressed with his testimony today?
Well, you know, I think he came across as very forthright, and it was good that he thanked the American taxpayers and all that. The odd thing to me, though, is listening to the questions of the congressman. You'd think that Citibank had gotten into trouble by on its proprietary trading operations or operations in Asia and all that, when that in fact wasn't the case at all. I mean, they got into trouble primarily on consumer lending. On originating, consumer securities that they couldn't distribute here, and then in the last 2 years, they've lost about $20 billion on consumer lending, most of that in the United States, while they were making money in Asia through the whole period. And in fact, last year their securities business contributed about $15 billion to profits. And so I thought the questions of the congressman were odd, and they didn't really focus on the fact that the problem that we had was making too many consumer loans at not strict enough credit standards, and that's really what needs to be addressed and looked at. And I'm sure that Citibank is doing that.
Yeah, I was gonna ask, because I mean, has that problem been addressed in your opinion? Maybe not just at Citibank, but bank-wide. I mean, has that problem been addressed in this country?
I think across the industry, this was painful for everybody, and bankers are human too, and they don't like to make the same mistake twice, and so credit standards have been tightened, and that's quite frankly a significant portion of why you see the slowdown or the contraction in loans that are out there. And I think you have to keep it in a big perspective. At the beginning of the Clinton administration, only 62% of the American households owned their home. By the time you got to 2005, 2006, that had gone from 64 to 69%. So we made credit available to an extra 5% of the homeowners out there. And what we've learned from all this is, unfortunately, a lot of them couldn't handle it.
How much of the problems at Citigroup do you think are operational and internal, and how much of the problem, and I'm speaking about the share price now, Chris, is due to the overhang that the government holds? I mean, that was talked about a lot in this hearing today, and clearly the government is just itching to get rid of really such a huge stake in Citi.
Yeah, okay, let me take those two separately. First of all, in terms of the operational problems, I'm sure a lot of the operational weaknesses have really been addressed. But banking it's a lot like the bobsled run, right? You make a mistake in turn 2 and you might not wipe out till turn 8. And it's exactly that way. Loans, the worst problems that we're dealing now with are the vintages 2005, 2006, 2007. That's what's causing the losses. Those are the loans they were made a couple of years ago. Right? Now, in terms of Citi's stock, I think the biggest overhang is the government's block. And unfortunately, I think they went about trying to privatize Citi, or reprivatize it. They went about it in a pretty ham-handed way in the fall. They should have first sold their own shares and then forced Citibank to recapitalize and to issue new stock to take out the TARP money. Because there's a big class of shareholders out there that just doesn't want to own the stock as long as the government is a big shareholder.
So what do you think about this year timeline that Treasury's putting out, Herb Allison today, to actually finally sell those shares?
Well, I think that's reasonable. I think they should do it. But, the sad thing is that in the fall, there were some nearly 40 billion shares that traded over $4 a share. The government of Singapore sold its stock. The government of Kuwait sold its stock. And our government wouldn't sell any of its stock. There would have easily been demand in the market for a couple of big blocks of the stock. And then you could have shown some progress on Citi reprivatizing, and it would have made it so much easier to raise capital to take out the TARP preferreds. And I don't know why they didn't choose that route, but it's a tragedy in my mind.
Hey, Chris, quick question. Still, I guess now aimed at the whole industry, or really at the entire economy. You say that the company is well poised for a rebound once a consumer credit improvement trend is more visibly in place. And you think Citi's one of the better banks that's really positioned for this because it's kind of a pure play on that. When do you think...
Well, actually, I want to say it's not one of the ones I'm recommending. I'm generally positive on banks, but I'm neutral on this stock.
I see that you have market outperform here, but you do say that it is more or less a pure play on the investment theme that consumer credit is turning, or when consumer credit turns. When do we see that?
You're beginning to see it, and it's still very early, but in the fourth quarter, we actually saw consumer charge-offs tick down a little bit. We get monthly numbers on credit card losses. Those look like they've definitely peaked. They look like they peaked late in the fall last year. And so it's still frail.
Got it.
But, and hopefully,
Got to wrap.